I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It's Wednesday, November 17th. We've got three markets for you. Yesterday, we talked about corn and soybeans. Today, we're going to recap some of those charts with today's explosive price action to the upside. And then to wrap things up, we'll finish on live cattle. But before we get into the charts, I do want to bring to your attention, if you didn't know already, we do have a Facebook group called Ag Chat Without the BS, where we update a lot of breaking information throughout the trading day. So again, if you're on Facebook, be sure to check that out and join that group, Ag Chat Without the BS. And without further ado, we'll get into the charts here. This is the chart we laid out in yesterday's Tech Talk video, and we talked about selling the upper end of this resistance near 580 to 586. This is the top end of the range going back to the beginning of November 1st and 2nd. So far, we've got a little bit of a double top up here, and we like selling into this pocket so long as we can defend it. Breakout and close above this 581, 586 area, you take your medicine and move on. But if you're a hedger and looking to protect price, it would be, I think, prudent to be a little bit more proactive at these elevated prices. The pivot pocket that we're looking at is a 565 area. A break and close below there is what we want to see long liquidation from the funds. We know that the funds have a relatively big net long position, so if we get a technical breakdown below 565, that could potentially open the door for some long liquidation towards the low end of the recent range near 550. Psychologically significant, but also technically significant. As you can see here, this was the breakout point from October 27th. We backfilled that on the, the 8th of November and 9th of November, and that provided the next stair step higher. So risk reward, we like looking at the sell side here so long as resistance hold. If you're bullish, you want to see a breakout above here and see this 565 hold. So that's what we're looking at for corn. Moving over to the soybean market. Soybeans, we had a big resistance pocket here, and we, as with corn, mentioned we like selling against this pocket so long as the bears can defend it. Well, we got the breakout move. That's your tap out point where you take your medicine and move on and let the market kind of reset. The market's working a little bit higher here today, not a little bit, quite a bit higher today with the technical breakout taking us towards the next resistance pocket, which is closer to that psychologically and technically significant $13 handle. It's a key Fibonacci retracement as well as a 100-day moving average. You're getting the RSI moving north, some of the more overbought levels since June. So potentially we get a little bit more follow through, but up at $13, I think if you're a producer and you've got some prices to protect, that'd be the next spot to be looking at getting a little bit more aggressive there on the sell side, or at least putting a floor in the market via options where you know what your risk is going into the trade, so you keep your upside mobility open. Now, wrapping things up with the cattle market, as promised, we're actually going all the way out to the April contract. December still has a couple weeks on it, but it has just been very stagnant, a very sideways trade here for the last couple of weeks. So we're looking a little bit further out to February and April. We're building a little bit of a wedge. If we can get a good bullish cattle on feed report here to round out the week, that could be enough to spark a technical breakout going into next week's trade. The trend is higher. I've notched some points here, higher lows, higher highs. So the bulls are in control, but they need to see some more fundamental news support the thesis of higher prices here to round out this year's trade. And again, Friday's cattle on feed report could be that catalyst. A breakout and close above this wedge could potentially take us to these old highs back above that 142 area, closer to 142.60. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.